Okay, welcome everyone. We'll start our lesson 1. Today lesson will go through LO1, Learning Outcome 1. As you know me, my name is Anjum Sattar. If you have any question, please drop me email anjum@ukversity.co.uk and I'll try my best, get back to you as soon as possible. So quickly, I'm working with University last approximately 10 years now, and I'm also teaching at University of Bradford, and I'll try my best to meet your expectation. If you have any questions, here my email address. So I normally teach accounts, background is ACCA, and I'm also teaching other qualifications such as MBA, MSc in finance, BSc in accounting and finance student. So I'll try my best to meet your expectations. So that's all about me. Please, if you don't mind, to quick, introduce me yourself, please, so we know each other, and then we can start our session. Okay. Please, if you just introduce me, what you're doing, what you've done, please, keeping in view of GDPR. If you don't want to share it, that's absolutely fine. We know each other, we can embed, some examples from your background, so we can get the concept. So you're working in accounts, Yinka?
Hello, hi, Jum. Yeah, that's correct. Yeah, I work basically in accounts. Yeah, so.
Okay, great. So we'll start the only two, so they're not join. Okay, welcome. Let's So we are doing Unit 1, Corporate Reporting for Strategic Business. That's which we'll go through. And each lesson will go through one LO, which is main learning outcome. Understand the fundamental ethic and professional principle in relation to accounting standards. That will be in our discussion today, accounting standards. Lesson 2 will go through appropriateness of financial reporting framework. We'll discuss, different framework within, and qualitative, quantitative characteristic of financial statements. Be able to prepare the financial statement for group entities. We'll go through the consolidated statement of comprehensive income, statement of financial position, and the lesson 4 will go through, be able to interpret, will go through the financial ratio, draw the recommendation based on. So each lesson we've been given each learning outcome, indicative content, what we're supposed to learn, and under each learning outcome and overall our discussion will cover all the learning outcomes, and all the bullet points, all the indicative contents, professional behaviors, ethics, compliance, standard, ATHE, professional bodies, international accounting standard, IS 1, 2, 7, 8. These standards we'll discuss, in our lesson today, and then we'll go through next week, our lesson 2, which is about understand the appropriateness of financial reporting framework. Then we'll go through LO3, LO4 in following lessons. So that's the way we deliver. If you have any question, feel free, please ask.
Yeah, sorry, hello, Ajum, yeah.
Can you hear me? Okay. Yes. Can you see it?
Yes. Can you hear me, please?
Yeah. It's Anju.
Ajum.
Yes.
Can you hear me? Hello.
Hello. Yes.
Yeah. Can you hear me?
Yes. My name is Anjum Sattar.
Okay, that's fine. I've taken time to listen to your lectures on the platform. Is it going to be kind of similar to what we expect in this particular one? Yeah.
Yes, we will record the session. Plus, we will do some numerical discussions as well. Yes.
Yeah, but what I'm saying is I've already listened to the one that's been recorded on the Moodle platform. Yeah.
Okay. Yes. So it's quite similar, but sometimes you have a question regarding any ISAs, you can do we can do the argument, and you can clarify, and we can do discussion if we have questions. So we can do accordingly. Yes, we saw the recordings available already on Moodle as well. We deliver, good few times this module. Okay, any other question from anyone? Welcome. Who else there, please? Please. Nurul, welcome. Okay, so that's, so today we'll go through our LO1, learning outcome 1. So that all our discussion will be about learning outcome. So learning outcome 1 is understand the fundamental of ethical and professional principles in relation to accounting standards and corporate reporting. So always get to you reflect what you already know about accounting standards, because there are number of new standard being released as well. Because after Enron, you heard about Enron scandal, World Telecom, and various others company. That's why there's a lot of new standard released to tackle these problems. Won't be happen. Increase the true and fairness, because the financial statement need to be true and fair. And these are all the standards which we'll discuss today. As I mentioned earlier, indicative contents, and that will be in our discussion. Okay, so first we have assessment criteria 1.1, explain the importance of professional behavior. So we'll go through ethics. What is meant by ethics? Ethics mean the moral principle. What is true and fair, and what are the moral? It can be varied. The main aim to ensure the transparency, reliability, consistency, and the comparability of the financial statement. We can standardize the policies and the principle in the nation and economy, because IES we have international accounting standard, because the companies have operation throughout the world. So we want to be unified system. That's why we have an international accounting standard. And within that, we carry on looking the ethics and PPCIO. PPCIO. Some people, the abbreviation consists of popular people chat in office. Popular, famous, popular people chat in office. So if you want to remember the abbreviation, that will help you to memorize the 5 professional code of ethics, such as if you're a member of ACPA or any other professional body. First is the professional behavior. Always not a conflicting information, not bias. Your professional behavior needs to be professionally competence and due care. Competency and due care, which is mean up-to-date knowledge. You always do CPD, continuous professional development. If you're a full-time employee, you have to do 35 hours a year to keep the record and submit to the professional body. The third, which is C is the confidentiality. Yes, so we have to look around confidentiality, because in a business is client data. We have a GDPR 2018 General Data Protection. It used to be DPA 1998 before. I is integrity. Integrity means honesty. Yes, we need to make sure we are honest and we meet the requirement of professional body. Then O is the objectivity. Our objective is true and fair. True and fair information to our client based on whatever the facts and figures we have. So not hiding things. So that's the key. And these are 5 professional code of ethics. To memorize it, popular people chat in office. So first P is the professional behavior. Second P is the professional competence, confidentiality, integrity, and objectivity. Any question if you have, please feel free to ask. Okay, then profession. The term profession and professionalism can be explained. The profession as the body of theory or the knowledge which is used to support the public interest. We always try our best to be work in the wider interest of the public. Wider interest of the public. Wider interest of the public is the most important element in ethics. Professionalism, taking action to support the public interest. Profession is ensured by the certain essential and defined characteristics. In a profession, expect true and fair, yes, rely and wider interest of the public. That's the key. Professionalism, members are seen to be acting professionally, having a professionalism. Professionalism may also be integrated is more the state of mind, while the profession provides the rules the members of the profession must follow. Professionally behaviors, yes, so we can look around. I copied the link guys here, please. If you want to look around, we have a Kaplan. Kaplan is a publisher, and if you Google it and say ethics Kaplan, you will find the chapter of the book on ethics and with the various examples which we can explore. If we all working in accounts, we know how we deal with the clients. Yes, we are a member of, or either you working in for or any other member of the organization or organization is a member of any professional body. So it's applied to everyone. Over the time, the profession appears to be taking more proactive than the reactive approach. Reactive approach, taking responsibility for any negative consequences accounting practices were appropriate and embedding those practices to remove. Like money laundering, what we can do, we can make sure with yes, refunds and things, not putting either separate accounts. So that's all is matter. Not charging the contingent fees. We can't charge it. We can't say we'll save your this tax, we'll charge you this fees. No, because we can only charge the fees which is provide the best services. So these are all we can look around and increase our reputation of the profession. Accounting standard, we can look around. The standard is to harmonize things. That's why the standard we have there. We want more fair and true information. We have international accounting standard, international financial reporting standard. We have FRS, financial reporting standard in UK, secretary accounting principles. We have these standards will carry on following. There are gaps. Gaps 1 and 2 are these. These are all important standard in different countries have their local standard can be different. Any question, please? If you have, you carry on asking. International financial reporting standard since 2005, all EU quoted companies, including in the UK, have been required to use international financial reporting standard to these types international financial reporting standards. It's set by accounting standard board, and then we have a international accounting standard issues before 2001 by international accounting standard predecessor, which we can look around international accounting standard committee, which used to issue the standards. International accounting standard framework, the conceptual framework is set out the principle belief that should be underlie the preparation and presentation of financial statement. Objective of the financial statement in general to provide the financial information about reporting and use and existing and potential investor are all the users. They can make the decision and they can rely on the information it will provide in the shape of financial statement. User of financial statements, general purpose, the conceptual framework states that the important, the primary investor lenders and investor lenders financial to make the decision buying or selling their shares, equities. We can look around the information about entities, economic resource is an asset. So we can look around the definition about asset according to the standard. Asset is anything controlled by entity which flow the future economic benefit. If anything you own it, but it's don't have economic value now. Maybe you have a Windows 98 CD, you bought it £250 each CD, but now no one is looking to buy, and we have to revalue those assets, according to the accounting standards. Then claim liabilities. Liability is anything you owe. It's a legal obligation by law you have to pay, which arise due to the past events. That's which we can look around economic resources and claim. And management efficiency and effectiveness is quite crucial, which we need to be look around. And that's all which we need to be conceptual framework and ethics which we need to run our organization effectively and increase the professional. Okay, what makes financial information useful? Fundamental qualitative characteristic is relevant, is capable to making difference in the decision, include the materiality, faithful represent, what the purpose of the represent. Always faithful representation, we need to give the complete information, neutral information, free from error. Then we have an enhanced characteristic of financial statement. Financial statement should be comparable. Always give the 2 years financial statement. People can compare it. Verifiability, what you're writing, we can verify it. Timeline, we need to prepare within 90 days of the year end. And the understandability, the financial statement, the facts and figures should be in those people have a general accounting knowledge, they can understand those. Materiality, all the material information, those are significant, can should be included in the financial statements. Of course, we have to follow all the legislation for fair representation, true and fair. We have a Company Act in the UK 2006, which we follow, and we have other concepts, international accounting standard, those we follow, so we need to be true and fair. Okay, so as we mentioned, asset, a resource controlled by entity as a result of the past events, from which the future economic benefits are expected to flow to the entity, and the liability to present obligation of entity arising from the past event. The settlement which expected to result in the outflow of the resources embedding economic benefit from the entity. So income increase the economic benefit, expenses reduce the economic benefit, contribution from owner, which is equity investing money, and they distribute to the owner. It's a dividend in shape of which we can look around these in all these standards. Which intangible asset, the asset, anything which is don't have a physical substance like a goodwill, technical knowledge, or these come intangible. Intangibility, we need to be. So you have to use the criteria to realize the asset is what contractual agreement we have, all these general principles we have to apply. So please, any question until now? Yes, no, we are okay. Okay guys, so goodwill, we have a IAS 36 International Accounting Standard about the goodwill, impairment of the goodwill. Yeah, goodwill, because internal generated goodwill, we can't really measure it reliably. Any asset you treat it, you have to make sure measure it reliably, which will flow the future economic benefit. If you have accounting equation, you all know asset equal to liability plus equity, asset minus liability equal to net asset, and net asset figure is always equal to. If someone is willing to pay more than the net asset, the difference of the purchase, that will be known as a goodwill. The net asset, the money you paid, the difference is your goodwill. That's why you're paying more than what your for the value of the net asset you have. Why you pay? So that's we can measure reliably when you do the purchase of or consolidate which consolidated financial statement, the goodwill value. Okay? So internal goodwill, research and development. Research is expense, but the development, the formulas we tested and we can measure reliably what we spend it, then we can treat it some goodwill. So that come under the definition, because the goodwill is your asset of the company. Research is recognized as expense. Development can be recognized as an intangible asset. How we can, as if they meet technical feasibility, if we have intention to complete the asset, ability to use and sell the asset in the future, that will give us economic benefit, profit, availability of adequate technical knowledge and feasibility and the resources we have, and we can measure reliably, then we can say is the asset and how much worth of the asset. Amortization, impairment, yes, we have IAS 38, we can do impairment. Impairment is a losses which we have to look around the value of the asset or value of the goodwill is carry on dropping, and we can measure reliably, we can do impairment or impairment review, which is compulsory to do. Impairment is the reduction of the recovery amount of the asset carrying amount. So one is the carrying amount, economics value, and value in use. That's all we need to be. If the value in use is less than, so that's economics value, we need to be look around and we under whichever is the higher we need to impair there are assets which indicate on the next slide. So an asset should be measured at the lower of carrying value and recover amount, whichever, and the higher of fair value and value in use. Fair value is the market value and the value in use, whichever is the higher. If the value in use is the higher than the fair value, then you do impairment on the value in use. If it's the fair value, market value, people are willing to buy more than that, then we do carrying amount. Carrying amount always, asset at cost minus your depreciation equal to carrying amount. Yes, minus recoverable amount equal to impairment. So recoverable amount of these two, you have to look around and you have to find the recoverable. Any question? You two, please. If you have any question, you can ask. Okay, accounting impairment. If the asset carried out as original cost, if the asset is being revalued above the cost, then we can look around and we can do the impairment. Yeah, the value we can put it. Inventory. Inventory come under IS2. Inventory, we have three types of inventory: raw material, finished goods, and work in progress. Inventory always we do measure at cost or net realizable value, whichever is the lower. Like window 98 CD, you bought it, let's say 200 pounds, and you wrote it the cost of asset value, cost of asset value at 200 pounds in the book account, because we not now is not, no one is going to buy the asset out as an inventory of 200 pounds as a CD, because now it's maybe it's 10 pounds. Maybe people not buy a 10 pound CD. Also, we can say realizable value or the sale value. Yes, value is now is 10 pounds. So asset need to be impaired according to realizable value or cost value, sale value, whichever is lower. Yes, you should record as a lower value asset, not higher value too. So that's other we have to do the judgment, we have to do research. Yeah, that's the way we can do the asset under IS2. Okay, inventory evaluation we can do first in first out method. LIFO is not anymore allowed. Last in first out method or FCO is here. Any question, please? If you have, you can ask. Is all clear? Yes, you all, please, you can ask them. Any question, feel free, please. Okay, IS 37, which is about the provision liability of uncertain things. Under IS 7, provision contingent liabilities are contingent assets. So liability is the legal obligation. We said you have to use the definition about asset and liability. We can measure reliably. Like if you have a court if you have a case against the company in the court, and the likelihood of the case is 51% or above, we are going to lose the case because we don't have, and then you can create is liability, contingent liability in the book of account, because the reason is in future it's a legal obligation. You have to settle, your economic benefit will be reduced. Yes, and we can measure it reliably, how much approximately, and then that's you can create it. Otherwise, if it's less, you can just put it under the in the book of account. So possible obligation that arise from the past events whose existence will be confirmed only that occurrence one or more uncertain future events. The present obligation that are not recognized. The contingent asset is the asset the past events whose existence will confirm only the occurrence, and that can be contingent asset. We can, if we have that formula, we test it, we can measure it reliably, the benefit of the asset, then we can treat it contingent. If we do it, we can get the benefit of it. Yes, so please, we have to follow the criteria. If it meets the definition, it's meet the give the economic benefit, then we can say the asset and contingent. Okay, so that's we have. Okay, guys. Next, we looking the events. We have IS 10. IS 10 International Accounting Standard 10 is the events when the financial statement is being signed off after that, any events, anything happen, it's not adjusting event within the accounting period. We'll do in the next accounting period. If within 90 days before the sign off, that's we can say the adjusting event. So that's come under IAS 10, International Accounting Standard 10. We can make adjustment, and we have to represent the true and fair information to our use. Okay, revenue, we have other IAS to measure revenue, IAS 30, IAS 18. Revenue, like, if you have a construction contract, but you not constructed, build the house, you got all the fees, all the money advance, and you say it's the sale income, is the revenue. No, you're not. You need to be only the proportion of the service you have provided. Otherwise, it's a liability, because your income not earned yet, like you learn about accrual and prepayment and accrued income. So this is can be, and we can measure reliably. We have to use the standard, and that standard is give us which we need to recognize in the book of account or not recognize in the book of account. Okay, IAS 16 is recognition of property, plant, equipment, depreciation, carrying value of the asset, and recognition of asset in the book of account, and measurement their values. All it's come under IAS 16, which is called property, plant, equipment, and depreciation method, which we can use it diminishing or fixed, but make sure whichever method you use, you will consistent with the method, because otherwise, if you change the method, you have to reinstate the figures, reinstate the financial statement, because the financial statement quality should be comparability. Okay, so there is a cost method. We can do revaluation. It can be gain or loss, and revaluation method can be used under this IAS 16 as well. Depreciation, of course, depreciation, we need to look around the cost and the fair value, reduce the amount, and residual value, the value at the end. All this we need to be decided within IAS 16 and estimate that. But need to be true and fair. The review of the depreciation charge, disposal of assets, how much value is left, because some asset can be in parts, and we need to recognize their values. So please, this we can use it. Asset adjusted as well, how much asset were at the start, what addition you have, what revaluation, what disposal, what depreciation, what is the net carrying value at the start and the end of the years, and that's the total value of the asset you can show. This is under IAS 16 we can do. Okay, then we have IAS 7, International Accounting Standard 7, which is about the cash flow statement, cash and cash equivalents, which is mean the receivables and the cash itself, because the invoices can be converted, and there are two methods we use for the cash flow statement to prepare: the indirect and direct method, and that's which we can prepare the cash flow. Cash can be generated from three activities. This is a pro forma we'll use, and we can use example of cash flows. Please, we've been given the Osborne handout. I uploaded those, and we have a Kaplan handouts as well. Those are quite good. You can pick the example when we'll go through our assignment, or if you want to be any generic example, you can. Okay, this is the format. IAS 7 is the indirect and direct method. Is cash received from customer, supplier, or you can say profit before tax, and then you can look around inventory, trade receivable, trade payables, either increase and decrease, what effect you have in that. Always think about in cash, yeah. So interest paid, tax paid, and all for that period. So cash operating activity mean our routine business which we do day in and out, and the cash flows under this. And then investing activities which we can look around, either the money being invested in certain activities, we can look around investing activities. And then we can look around financing activities. So financing activities come under that's which we carry on looking. So investing activities, financing activities, that's inflow and outflow. The cash, what net we have. Then we have opening balance, and either add or minus the net cash flows from these three activities. plus opening balance if you have. That should be the figure equal to the cash balance which you've been given in the statement of financial position, that we can reconcile, or is the reconciliation which we do. Any question from anyone, please, if you have? We all okay? Can you hear me?
We can hear you. Thank you. Yeah.
Thank you. Great. Thanks for confirming. So please, we can look around. Then we have 1.2 ethical requirement, as we discuss about, popular people chat in our phase. We need to be focused on ethics, and ethics mean moral principle, whichever awarding body you're member, either you'll be IFA or ATHE or your organization, popular people chat in our phase, ethics we need to follow. Okay, so when ethics can compromise due to self-interest, self-review if you're checking your own work, advocacy, familiarities, and intimidations, these are all the threads leads to compromise. We need to draw the safeguard. Safeguard is the measures towards, to protect our professional code of ethics, which we can look around. Safeguard in practice are you just, in a profession, and this importance of independency, reliability of the financial information, credibility of the financial information, value of money, of audit and all, credibility, because couple of you heard about Enron case, like Anderson, that's the company audit. So when will self-interest, one can be happen if your financial interest you have, your close business or relationship if you have, employment with the client, partners of the client, and broad families, friends. So that can be self-interest. So we try to not deal with it because the objectivity can be compromised, and it's not a professional behavior. Self-review, yes, recent service with the client. You used to be bookkeeper, now you're auditor. So it means you're checking your own work, or it's your family members. Self-review thread can be, and we supposed to not accept that. Advocacy, if you're giving two clients, they are going to merge it. Both are your clients. Two companies, they are going to merge together. Both are your client, and they want advice from you. So it's very difficult if you give advice to one and you may be compromised to other. If you tell can't provide you advice because other party is a client of our firm, it means you're going to break the confidentiality. Maybe you deal with the client and someone else will deal with the client. So you can protect it, and that can be safeguarded. Conflict of interest, yes. So maybe you're referring something is conflicting your family's members, are you looking, or somebody intimidate you close relationship, yes, these can be. So we try to draw the safeguard because our professional code of ethics not compromised. Okay, that's we have 1.1, 1.2, and that's which we supposed to look around. Any question from anyone, please? If you have, you can ask. So today lesson we discuss about P 1.1, 1.2, ethical, and explain the accounting standard. We discuss about different accounting standards in this lesson. So please, next lesson we'll go to LO2, and you have all the information available on the books, on our Moodle page. So I can quickly show you on our Moodle page as well. So you can follow our Moodle page, and if you have any question, you can ask, and I can go through things accordingly with you. So here we take you back to we're doing reporting. Yes, so we can find corporate reporting. Yes, so here is your subject, and when we log in, please you can follow all the required resources. Those are given on our Moodle page. So please, you will see here all the resources we have. Yes, you've been given the books and articles here, and I uploaded all other examples. You've been given assignments, and other than that, please, if you so I'm going to upload, then not upload it back of it. Okay, compliance. I'll give you the Kaplan book. So if you look accounting standards. Kaplan. If you find here Kaplan is a publisher, and if you scroll down, so you will find here accounting standard, that chapters of the book, and we can this way you can do research, you can find it, and lot of scenarios you've been given. If you want specific accounting standard, like we've been given in the indicated contents, international accounting standard, we can say IF, let's say IF 16, and Kaplan. So if you go down, you can find it. Accounting standard property, plant, equipment, either through Kaplan or any other website of your choice. So that's the way you can follow. Kaplan is the publisher of non-current asset and all, so you can find it. Either 16 other accounting standard and depreciation method within that standard. That's the way you can search in different standards. And I'm going to upload the ACCA F7 book, which is F7 is financial reporting. Please, if you want to look around, free some resources, quite good, which is set by London School of Finance. That is a free for everyone. They set up, so there you can TX. Sorry, you're looking in the FR financial reporting. So click here, please. Can you see all? Hope you can see it. So I can show you. So these resources are very useful. So you can set up your account on. You can download the booklet with all the standard there, please, and all the quizzes, and that's help you to. And when you prepare, you can use those. It's quite good, useful resources. Okay, that's all from my end. And today we discussed about these accounting standards, and we discussed about ethics. And next lesson we'll go through it. Thanks for attending. Have a lovely weekend. Anyone, any question? If you have, you can ask.
Thank you. Thanks.
Thank you.
Yeah, thank you. Yeah.